I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse.
Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Today we're going to get into some really interesting chart action, and we're going to be talking about bull and bear traps. Past couple episodes we've been talking about order entry, which was really important housekeeping, but today we're going to expand our knowledge from the first 5 to 10 episodes to now, where we really get into the nitty-gritty important information to understand. Okay, so bull and bear traps. It may sound like a scary name, but it's actually where you can make the most amount of money in the shortest amount of time. Let me explain, okay? So a bull trap, so it occurs when the price comes up to a level, faking out a break to the upside, faking the bulls out, getting them long, and then reversing and trapping the bulls at a higher price, right? So a bear trap is just the opposite. It's when price comes down to a level, it's faking a breakdown, getting the bears short, and then breaking to the upside and trapping the bears. So here's a chart on ARM Holdings. This was from last week. You can see a couple things here. All right, you see a double top here, double top, and you can see, well, let me just erase the previous writing. So you have a double top right here. You see this little wick right here. This was called a bull trap. The bulls were going long here. They thought the move was going to break to the upside and go higher. And what happened on the price? They actually reversed the price all the way down here. I think it was about a 4% move. We're going to zoom in, I think, to the 10-minute chart so you can see what I'm talking about. All right, so this is the 10-minute chart on ARM Holdings. We traded this on Friday last week. You can see a pivot here, a pivot high here. You can see there was actually two bull traps. There was a bull trap right here on this line, okay? And there was a bull trap on this blue line. This is the all-time high, okay? All-time high and double top, okay? So you had a double bull trap, a bull trap on this upsloping line and the all-time high, and look at the move to the downside. Amazing. This is where you can make a lot of money. And what we say here is the biggest moves come from failed moves, okay? The biggest move comes from failed moves. This is a failed move right here, aka a bull trap, okay? So very good. We're going to go to the next chart, and same type of thing. This is HIMS. This happened today. We traded this today on the Apex Live trading floor. And you can see, same thing, double top, all-time high. You can see a smaller wick there, but that's all you need to understand that, hey, the bulls are getting trapped up here. It's likely to reverse, and here you go, a 7% plus move to the downside. Really, really incredible move. And again, we're going to zoom in here. And again, another double bull trap. This is all-time high right here, plus double top, okay? And double top right here, this blue line. Then you have this parallel. Look at this parallel. If you don't know what parallels are, go back to the previous episodes and you can watch those, okay? You can understand how parallels work. Here's your pivot lows. Here's your pivot high right here. Here is the bull trap on the parallel. And here is your bull trap on the all-time highs. And look at that move to the downside. Okay, really, really incredible. We were shorting somewhere up in this area, adding up here at double top. And we covered down in this region. We're going to go through that. So very, very important to understand this. This is a head and shoulders on ARM on the 10-minute, okay, that's developing now. This was the bull trap from last week. But look at this. This is actually a bear trap. Okay? So you had this upsloping trend line, broke to the downside, and then reversed higher, trapping the bears. So people were going short. They were going short right here. And what happened? The price got ripped higher, trapping the bears, forcing them to stop out and buy to cover up in here, creating even more buying volume, okay, and green candles. So really, really important to understand how that works. This is Dell. This is the 1 minute chart. And again, these patterns work on all time frames. I've just shown you a bull trap on the daily time frame, a bear trap on the 10-minute time frame. This is a bull trap on the 1 minute time frame. Again, here's our parallel, here's our pivot lows right there. Actually, this is a double. This is a bear trap and a bull trap. You see that? So here's your pivot lows right here, very clear lines. Here's your bear trap, here's your bull trap. You can see the huge move up after the bear trap and the huge move down. Huge move up after the bear trap and huge move down after the bull trap. This is where you can get really good at saying, okay, there's a trap here, I need to reverse in the opposite direction. All right? So, again, how do you play these? Recognize that it's a bull or bear trap. Trade in the opposite direction. You can DCA in, but make sure you set a stop when your thesis is invalidated. All right? All right, awesome. So we're going to go through these charts. I'm going to show you how I traded these. All right? So this is ARM. This is the daily chart. We're going to flip over to the 10-minute chart on ARM. And you're going to see that we had this trend line here. I'd have to go back and look. I think this is around 10 a.m. on Friday. But I started shorting here, okay, somewhere at double top. All right. Then I added, I think, here. And then I added here on a further bull trap of this trend line. And I had a 3/10 position. I had a 3/10 position on ARM last week. My average was right here. Okay. And I think I covered, I don't know, somewhere in this area. But imagine had I continued to hold, oh no, actually I covered, not here, I covered around 157. All right, so it actually went a little lower, but that was almost a 4 or 5% gain in a couple hours, so really, really powerful. Once you study the charts, understand this technical analysis and these theories and concepts, and then put them into practice. It's not easy. It's definitely not easy. It takes a lot of time, hundreds of hours, thousands of hours in front of the screen, studying, just about all day, every day. So really, really important to understand this. We're going to be talking about HIMS. Okay, this is the same chart from today. So how did we trade this today? How did I trade this today? I'll show you right now. Again. So we have this rising parallel. We know our double tops here. So I started a position somewhere in this area, all right? And then what did I do? I added a position right here, right at double top, okay? And then I had my third add right here. This is very, very accurate. This is about where I had my entry, where my add was, and where my second add was, okay? Didn't quite get to my second add, so my average was right here. I waited for the fall. I could see that it was weak, all right? And I covered somewhere around here, all right? Now, obviously, I covered too soon, but hey, I still made a profit. You can never go broke taking a profit. You can do this all day, every day if you really focus and put the time in. So very good. Awesome, awesome. Let me show you the next chart. So I actually entered this short here on a close below this neckline. This is the head and shoulders with an upsloping neckline. I entered the arm short here, and I realized that it was a bear trap, and I covered my short right here. So I took a small loss there today on ARM, but I took a big win on HIMS. So my win on HIMS offset my loss on ARM, and understanding that this was a bear trap helped me exit very quickly. That's the key. Exiting your losers quickly and letting your winners run. That really is the key. It's very, very simple. Investing, trading, however, whatever you're doing, it's just simple math that works every time. So again, on this, this is Dell, and this is somewhat of a immature parallel on Dell, right? At this point, right? This point in time. So you could be looking to go long here and playing this bear trap to the upside, but you've got VWAP here, all right? You've got VWAP right there. So it's a little bit of resistance, if you will, all right? But one thing that you could do is you could say, all right, now we've got a really well-defined parallel. Pivot low, pivot high, pivot low, bear trap, telling me that this trend line is valid, okay? Then you have a second pivot high. Here's your opportunity right here. This is where, now I didn't take this trade, but this is where you enter, right here. And this is where you add, right here. All right? Now, let's say, and look at this fall, right? Boom. Let's say that you entered here, you added here. Where would you stop out? Well, I would stop out probably on a close, and again, this is the 1 minute, probably on a 1 minute close or pierce above this line right here. Close is safer because what can happen is if you break out and then retest the move to the upside on a rising parallel that should break down, right? Should break down. What happens is you have a lot of shorts who cover. Essentially, cover is buying, right? Then you have buyers buying that, right? So if you have a rising parallel, let's just put this, rising parallel, price is coming like this, breaks to the upside, you have parabolic move to the upside on a break higher, which is why you must put your stop right up there if this is, how you're trading. So very, very important. So again, just to reiterate, this was a bull trap. So if you can get really good with your levels and your technical analysis, you can realize when the opportunities are there by understanding bull and bear traps. And again, remembering that the biggest moves come from failed moves, so important. So I hope you enjoyed that episode. This is an actionable trading alpha that you can learn and practice and profit from in the markets. Bull and bear traps, again, the biggest moves come from failed moves, and understanding this and spotting this in real time takes practice, it takes time, but once you do that, it really is powerful. So I hope you enjoyed that. We'll see you next week here on the Market Pulse. Take care.